afternoon, traders, and welcome to this week's Forex Focus. I hope you've all had a good week in the markets and had some nice trades out there. There was certainly some nice momentum moves out there to be taken, so hopefully you managed to get involved in some of those. In this week's episode, there aren't that many trades to look at, unfortunately, not like in some other weeks that we've had. There's only sort of 2 or 3 trades that we're going to look at this week, but that's basically because even though there are technical setups out there, fundamentally some of the landscape has changed just a little bit. So from that perspective, they don't represent high probability setups anymore. So without further ado, let's jump over to the charts and take a look at what is setting up for us this week. So the first chart that we're going to take a look at is the Aussie CAD. Now the Aussie CAD has been rallying since around November of last year up until the beginning of this year, at which point it started to go sideways and started to consolidate. And that's absolutely fine because we've got this momentum move here and the markets never go, from A to B without stopping in between. So this is a sort of thing that you would expect. Obviously, we've had the fact that oil prices have taken a bit of a bounce over the last week or two, which has helped the Canadian dollar a little bit, but we don't see that as being like a big fundamental change there or fundamental drive that's going to change the direction of this market. So ultimately, if the market can hold above this sort of level here at the 0.9817 and certainly not break below the 100 moving average, then we're certainly going to be looking at this as an opportunity to the upside. And it might not be that the market rallies quite as much as it did here from the 2nd of November through to the beginning of January 2016, which is almost sort of like 1,000 pip move right there. But we certainly will see the market move up a little bit, and we might be able to exploit it for at least a few hundred pips there. Even as I said, if it doesn't go another 1,000 pips, we'll certainly get some sort of a momentum move to the upside. So we need to wait to watch what happens next week. Obviously, if it breaks back below here and then breaks the 100 moving average on the daily chart, that might be a little bit of a signal that the market's going to trend back down towards the lows. But if we can hold this pattern here, then it's certainly something we're going to look to take advantage of. The pound dollar is another one that is setting up quite nicely, and you can see it best here by looking at the 4-hour chart. Let me zoom in there for you just very quickly. So you can see here on the 4-hour chart, the market has been moving down. It's been trending down for quite some time now. It then pulled back somewhat and came back towards the 100 moving average there, at which point the market has then broken down. And if we jump into the 1-hour chart here, I can show you exactly what we're looking at. So the market broke through this level here. We didn't manage to get involved in this on a break of that low, even though it's a completely valid setup, to be honest with you. But what we're now seeing here on the 1-hour chart is the market's pulling back somewhat, back towards the trend line here. If it can respect that trend line and give us a trend reversal around this level here, then we're certainly going to be looking to take this one to the downside. Stops are going to be quite wide above the highs there, and we can then see that going quite a bit further down if we take a look at the weekly chart there for the next stopping distance. As you can see here, we're playing with this level here, which it was always going to anyway. But if we get the break of that trend line there, that's then going to break those lows. That will be a confirmation of the break of those lows, and we can then see that the market will come down towards the 1.35 type level. So quite a big move on there. Nice risk reward. You'd have your stop above the highs there around the 1.4425 level, somewhere around there. And obviously you'll be shooting for 1.35 down here. So it's quite a nice risk reward trade that we potentially have on our hands there. Then we have the dollar yen, and this is what I was talking about earlier when I was saying that, fundamentally some things have changed. Obviously, the Bank of Japan came out last week and surprised the market by moving towards negative interest rates, or to negative interest rates rather. And that basically spells a bit of a trend change there for the yen. The yen had obviously been appreciating against many of the different currency pairs over the past couple of weeks or couple of months, and ultimately what this looks like on a technical chart, if you take a look at something like the pound yen, and let's just jump over there very quickly, you can see that this looks like a nice opportunity to get in on the fact that the market has pulled back somewhat. However, as I said, the fact that the Japanese came out and surprised the markets there last week, it doesn't fill me with confidence in terms of taking this trade to the short side, even though it potentially will go there and potentially will make us money. Obviously, the Bank of Japan's moves last week will contribute a little bit towards some yen weakness, at least in the days and weeks ahead. So for that reason, even though this might prove to be a beautiful setup there, I'm going to skip it on those grounds, and instead going to look to take advantage of some yen weakness on the back of a pullback here in the 1 hour charts, as you can see on the dollar yen. The dollar yen, if we look at the daily chart a minute, you can see this is a very, very bullish candle there. And even though in the past we have seen these moves completely reversed, we saw, Bank of Japan intervention, have very, very little effect on the markets back in sort of 2007, 2008. So the Bank of Japan would come in, they would intervene, and the market would immediately push it the other way. But in these circumstances here, we want to at least give it a chance and see what the markets think of it before we look to sell it back down there. So for this reason, even though we can have our eyes on things like the pound yen in order to trade the pullback there, I think initially, at least for this week, just to be a little bit more conservative and just see how the markets are going to view this, we might look for an opportunity and a pullback on the dollar yen charts here. So if we can get a pullback towards the 100 moving average, something like that, that will give us an opportunity to get in there and get long. So that wraps it up for this week's Forex Focus. I hope you've all enjoyed it. You found some value there. I know that obviously there weren't that many opportunities to look at, but as I said, sometimes it's just better to sit on the sidelines rather than take opportunities that aren't the highest probability. And we'd rather wait to see what the markets do and how they take things as opposed to just jump into a trade blindly. And currency markets are quite difficult ones to trade because there's always a number of factors that can contribute to, the way a pair will go, the direction that it's going to trade. If you're trading something like the equities markets, so you're trading stocks, you're trading the indices, oftentimes that can be a lot more straightforward because on the back of something like the Bank of Japan doing what they did this week, the obvious setup there is to go and look at buying the Nikkei or something like that, looking at Japanese stocks, because you'd imagine that the Japanese stock market would appreciate, over the coming days and the coming weeks. So sometimes it might be a nice idea just to branch out a little bit rather than just looking at the currency markets at times like this when, sometimes it's better to stay on the sideline to protect your capital because there's nothing that obvious there. Whereas if you look a little bit further afield, you look at the stock markets and things like that, there are some more obvious trades out there. So I know that a lot of you love the FX markets, you love Forex. We do too, but I'm just giving you a little bit of a heads up that, you can find more obvious trades, more obvious setups elsewhere if you're willing to sort of just broaden your trading horizons just that little bit right there. All right. So just as a quick reminder, obviously this none of this is investment advice. We're just talking to you about what we're doing with our own accounts. Okay, so we're not saying go out there and take this trade or anything like that because we are not authorized or regulated to give that sort of advice. We're literally just telling you what we're doing with our own accounts. Okay, so thank you very much for watching this. I hope you enjoyed it and I look forward to seeing you on the next Forex Focus. So take care now and have a great day.